Hey everybody, Sean Osborne here with Basecamp Trading, and today we are looking at gold futures. You don't talk about futures too much in here. Nothing wrong with looking at futures. It's very similar in looking at charts. Always good to take advantage of whatever markets you can find. And with gold's been moving lower here. It's been moving lower at this point. We got down as low as 4046. We came back up and retested the 4403.6 area. And then we came lower, and the solid line here is the 4,000 level. And if you look at what's happening here, we're not closing below that 4,000 level. Yes, we did come down and get a little bit lower here. We got down to 3975.7, 3976.3, and then we started moving back up again. Now, a couple things that's what's happening here. One is we're intraday, we're going below 4,000, but not closing below it. So we're not confirming that that's where the so-called experts at the end of the day are placing it. So only visiting below 4,000 and as low as 3975.7. But when we pull back up here, what's happening is that gives us an opportunity, since we still have bearish histograms on our MQ super momentum, we still have a bias to the downside here. So it's kind of waiting to close below 4,000, in the meantime setting up what we call bear flags. And if the bar that has a setup, like these yellow dots show when you have a setup here for a bear flag, if the bar breaks below the previous low when you have a bear flag setup, then that would be a potential entry to go lower. And markedly, we would also be interested in seeing it close at the end of the day below 4,000 to go lower. But there is something else here that is telling us that maybe it's not going to go below 4,000, and that is that the fast line is telling us that there's a divergence. So if you look back here, we have a pivot right here where the fast line came down to a low value here. It happens to be minus 40.30. It doesn't matter exactly what the number is, but relative to this swing low again, you can see here we only came down to around 30. So 40 is lower than 30. We did not go as low, even though price is going lower. And when price is lower and the fast line's not lower, we call that a bullish divergence. So we're actually not expecting it to continue moving lower. So we're kind of caught here seeing where price is threatening to move lower, but it's finding some support at 4,000. We're getting bear flags, but it's not triggering. And we have a divergence telling us that, hey, it's not likely to keep going lower. Now, it doesn't necessarily mean it's going to reverse. What it means is we kind of hesitate here for a little bit longer until we get some strength in. So this isn't really possibly all that helpful in finding an entry here, although I would be interested if we close below the 4,000 point and trigger the bear flag, which we would if that would happen today, for example. But it's also interesting to know that sometimes the market's telling us that it doesn't want to do something, and that can be valuable even if it's not a trade opportunity, because then we can stay out of the trade and avoid taking a loss on it, or possibly be ready should this reverse and start to move in a more bullish way. We could take advantage of the trade going the other way. But if it does decide to go through and it does break that, then we'll have another opportunity for another leg lower. We're just at a point where it needs to make a decision at a significant point. And sometimes that is very valuable, a very valuable skill to have in reading the markets. If you like this kind of analysis, give us a try. Join us for 30 days, and the details for doing so are listed in the comments below.